Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah, and our guest today, after a really long time on air, is Siddhartha Bhaiya, MD, Equitas Investment Consultancy. Siddharth, so good having you. Thanks so much for taking the time out.
Good morning, Neeraj, and good morning to the viewers at NDTV Profit.
Yeah, thank you so much. And since we are meeting for the first time after Diwali, have a great new year.
Thank you.
And a new Samvat too. But could it be a good Samvat, Siddharth? Because I firstly need to tell that while the melt up, if you will, if I can call it a melt up really, but from the time that you took a call that you want to sit on a bit of cash because you thought there were excesses in the system, and if the next 2,000, 3,000 points post the election might have been maybe tough relatively, but I think your call is now getting vindicated. The falls have come in, suddenly people are waking up and smelling the coffee. Some of the signs that are coming out around growth as well are, if not alarming, starting to feel a bit worrying. You reckon so?
So 2 points, Neeraj, I want to highlight. First is we got very, very worried about valuations, say around 5-6 months back. There were far too many excesses in the Indian markets on the valuation front. And in fact, so much so that the valuations were at a level which I've never read of in history, or it was mammoth, correct? And our biggest call on valuation was that market cap to GDP had hit 150% on election day or slightly after that, correct? And typically when market cap to GDP hits 150%, it tells you that, everything good is priced into the stock markets. Last time we hit 150% market cap to GDP was 2008. And after that we had 2009 and the Lehman crisis and this. So we were very worried as far as valuations were concerned. And second, after that, and in fact we were the first ones to point that out in our newsletter, which is top down, bottom up, in August, that we are seeing signs of slowdown, way before everyone else was this. And in fact, August, it was a very small, it occupied a very small space in our newsletter. September, it became bigger, and October was far, far, far more bigger. So now you have a very deadly combination where you have very high valuations which are some of the most expensive in the world, and you have growth, which has been very, very tepid, right? The September quarter results season was anything but a disaster. Nobody expected the kind of numbers that you name a sector and the results have been bad. Yeah. So it's a very, very deadly combination.
And you think this could last? I mean, so two points that if I can play the devil's advocate, because that should be my role, right?
Yes, 100%.
That there is an argument that the government spend in the first 6 months has been slow.
Yes.
For various reasons, elections, monsoons, so on and so forth, tracking well below, despite the revenues looking okay. So what if the spend goes up? And there are some signs that the spend may have moved up a little bit, so on and so forth. So what if that were to happen? And therefore, will H2 be better than H1, which was bogged down predominantly because of a very weak Q2 and a reasonably weak Q1 too because of the government election?
Correct. So again, as I said, Neeraj, we'll have to look at it from this. First is, what we have to understand is government spending going into election is always very, very high. Okay, historically and world over. If you look at the US, the Democrats spent very, very heavily going into the elections. It's another thing that they lost it, but it's a very age-old, formula that right. You spend heavily into the elections, the economy does well, and hopefully the incumbent wins. So you had a very, very high base in H2 last year as well. So clearly on a YOY basis, even if we do well, H1 was a disaster as far as government spending is concerned, as far as government capex is concerned. So even if it picks up from H1, on a YOY basis, the base is still going to have an impact. Second, what you have to understand is government spending. The biggest bottleneck for government spending is labor, is availability of labor. And there's only so much that we have. We speak to a lot of infra companies, and the biggest challenge in execution is labor. Okay. So let's not assume that we can make up for what we did last year. It'll be very, very difficult. Not possible. In fact, even though growth will come back vis-a-vis H1, I think compared to what we did last year, given the fact that it was an election year, it's going to be very difficult to even show YOY growth.
Wow. Okay. So the estimates for earnings growth have been scaled down significantly already. You are saying even that expectation is high right now.
Oh yes.
Consensus.
Oh yes. You know, analysts draw an Excel sheet, and in their Excel sheets, margins always go up, and profitability always goes up. Who knows, you know, what this is, but September quarter was a big surprise for us, and for somebody who was as bearish as we were, even we were caught. I never thought that the scale of decline would be so fast.
Right.
And Neeraj, I'm here, and the biggest this is as far as urban consumption is concerned. And I have a theory here why we have seen such a fast decline as far as urban consumption is concerned. I think it has got a lot to do with weekly options.
Okay.
I see Zomato guys and Uber guys and everybody trading options. All of these, and then there's the SEBI data that all of these people have lost money. Losses till March were like 1,82,000 crores. My sense is from 1st of April to 30th of October, right? That 1,82,000 crores was for 3 years. I don't have the data, but for the first 7 months of the year, 8 months of the year, or the financial year, the losses would have been much higher because volumes have been much higher.
Right.
So what is happening is, because of option trading, you're seeing wealth flow from the masses to a select few.
Yes.
Which is the global HFTs and the global algo traders. And some of these guys are making billions of dollars out of it. And I've been crying hoarse about this. And I really wanted to highlight this because this nuisance has to stop.
Yeah.
This nuisance of it doesn't give, it's just a gambling instrument. There's no hedging, right? The whole idea of having derivatives was that there should be hedging, but there's no hedging. It is just pure gambling. And anyone with, you just need to be semi-literate. So that's my take on why there's been such a, rapid decline as far as urban consumption is concerned. Nothing else explains.
Yeah. So the naysayers will say, oh, we don't want a police state in this. People should be allowed a free will to make their choices and all instruments should be available. You are saying when it comes to this weekly options availability, going by the track record that SEBI's put out as well, that 91% of the people are anyway losing money, it's okay to go down that route because it is for the larger good.
See, it's like saying we are going to self-police ourselves. We are model citizens and we will self-police ourselves. It doesn't work that way. There has to be a law, whether it is relating. Then why do you have the securities law then?
Yeah.
There has to be a law, right? If something is wrong, then that has to be curbed, because the guy who's doing it, which is your, Zomato driver or an Uber driver or, all these guys, they're not aware of the risks.
Yeah, that's true. That's true. Well, and in some sense, I'm glad that from putting out cautionary notes, there is now action being taken. Albeit, so you could argue that it is late, it is still slow, but there is action being taken in terms of curbing some of these things, right? Margins, do away with some of the weekly expiries as well. You'd be happy with that, I presume.
Yes, but I don't see the need for weekly expiries.
Yeah, exactly. Okay.
There's absolutely no, even one is a lot. Is a lot. See, this has led to financial drain from the masses.
Point well noted. Okay. So, let's therefore now put this into perspective, Siddharth. You look at cycles very, very closely because you invest like that. How weak will this cycle get because of various factors, including this options expiry that you spoke about, and if there is curbing of that, etc. Do you see that turning over the course of the next 6 to 12 to 18 months?
See, I'll be honest with you. What we do is we keep on monitoring situation rather than predicting. Right. Our first monitoring situation, as I told you, 6 months back, was on the valuation front. August, we started seeing signs of slowdown. September, October, right. November has not been as bad as, say, in October, but still there's no major recovery to talk about. So we'll keep on monitoring situation. Valuations are still very expensive for a significant portion of the market, and there's a long way to go as far as valuation correction is concerned. And the bigger froth is in the small and the mid cap space. People talk about, oh, Nifty P is only at 26, 27, but the small cap index quotes at 40 PE multiple. The mid cap index quotes at 40 PE multiple, or rather it was still a month back. So that is where the bigger froth is. You know, majority of portfolios are in small and mid caps, and then they talk about Nifty P multiple being not very expensive.
Yeah, I saw this note on X from Harish Krishnan of Aditya Birla Sun Life, which I put out in a morning note that I write as well, that I think the ownership of micro caps by individual investors from 40,000 crores in 2021 has moved up to, I think, 3.3 lakh crores. Individual ownership of micro caps. It's just staggering, and I think some of these...
So, Neeraj, what I do is I have a lot of family offices and, you know, a lot of people who come to my office, and we have discussions, and I ask them only two questions. I said, what was your allocation to equities in March 2020? And is it lower or higher right now? Logically speaking, your allocation to equities as a percentage of your net worth should have been higher in March 2020 and lower right now, because the markets have gone up, right? That's the whole idea. You buy small, you buy low, sell high.
Okay, you're saying people should have sold and people haven't.
Logically speaking, Neeraj, what should you do? When the market is down, you put in a lot of money, and as the market goes up, you reduce your exposure.
People don't do that.
But that's the first check that I want to give. Second is, what was your exposure to small and mid caps in March 2020? And what is your exposure to small and mid caps right now?
Yeah.
And I'm a small and a mid cap investor through and through. And I can tell you, nobody was buying small and mid caps back then. Everybody is, that was not even 5% of allocation for people. And today, all they want to do is small and mid caps. Nobody wants to do large caps.
Yeah. Are you wanting to do large caps currently, or you just right now sitting on the sidelines?
Still sitting. Our cash levels have gone up. And
what is your cash level currently, if I may? It was 30% the last time we spoke, right? Which was 6 months ago.
We're upwards of 80%.
80% in cash?
Because we just don't find opportunities to invest.
Okay.
Right? The valuations, as I told you, were expensive. Now the growth has come off. So there is absolutely no reason for us to own stocks.
Is that money allocated elsewhere? Because I know that you have an East Asia fund, if I'm not wrong,
correct,
right? And I think that is done really well. So is that money getting allocated elsewhere, or are you sitting on that cash waiting for the opportunity in India?
For a domestic you know, we're sitting on that. But obviously, yes, we've raised a lot of money as far as our East Asia fund is concerned. We've put in our own capital over there as well. And what we've been doing is, for the last 9 months, we've been researching a lot of global markets. And what we're finding is valuations globally are at a fraction of what the valuations are in India.
Yeah.
They're at a fraction of, I'm talking about not even percentage discount, I'm talking about a fraction. So you just can't justify. You just can't justify some of the valuations. Like Hyundai in Korea, we put out a note, and you know, it went viral before this, before the IPO. It's available at 5 PE multiple. Why would you buy, you know, Hyundai in India at 25 or whatever PE multiple it is quoting at? So anyway, Mercedes-Benz is available at 8-9 PE multiple, Volkswagen, you name this, and there is a reason why, because they're getting hammered by Chinese auto globally, right? And yet the people talk about growth in India. Well, BYD just grew 50% last month, YOY, as a company, and they're selling more cars, for 50% more cars than what the Indian auto company sector sells. By, you know, Indian auto sold, I think, like 3.5 lakh cars. BYD is closer to 5 lakh cars on a monthly basis. And it's growing at 50%. So, you know, just because the stock prices were going up, you were saying, oh, we are a growth economy. No.
Wow. Siddharth, it's sounding gloomy. So I would love to know, what will make you change this? Will it be a correction in the market to reasonable valuations? And based on your assessment of growth, because I heard you say that FY25 could be a flat year of growth. We don't know what FY26 will do, right? Again. So what will make you change this? Would it be a correction in the market? And if so, what quantum of correction would come in before somebody like you, who's sitting on so much of cash, might think of putting in some cash to work with a hypothesis that chalo kabhi growth aayega wapas?
So I want to see blood on the street.
Okay.
I want to see, that's where you make multi-bagger. You make multi-baggers when you buy stocks in March 2020, or rather you hold them through that period. Right. Our portfolio went up. What people talk about us as being doomsday professors, prophets, but we're not. We made a lot of money in small and mid caps from March 20 onwards to and we made a lot of money over the last 11 years.
Last 11 years, yeah, exactly.
Right? So it's just that, again, as I said, we will evaluate the facts. It will be a combination of both. If the economy were to turn around or this, we might change our stance. But at this point in time, the valuations don't justify, as I said. And on top of it, you have a situation where growth has become a challenge. So we'll wait for the facts to change.
Got it. Okay, I'm trying to understand this. What could make the facts change a bit? So let's assume the capex comes back in a small way. Agree,
Yes.
it will not come back fully because the economy may not have the capacity to absorb.
Correct.
But let's assume there is capex done by the government. Let's assume there is some private sector capex also coming into fray. It may not make the numbers change at all in FY25. But would that be a necessary, if not a sufficient condition for growth to come back in FY26?
As I said, at some point in time, a little bit of the capex will come back. I'm not denying the fact that. But what you have to understand also is the peak of government revenues, tax collection is behind us.
Okay.
Right? STT goes down with your weekly options getting this. Your capital gains number has peaked out in my view. Correct? Corporate tax is going to go down because profitability is not there. Right? And typically, if profitability is growing at only 3 or 4%, then tax actually falls at a much faster pace because companies then start using whatever deductions are available under various things. GST growth rate is coming off a high base. The base was very high. Again, remember H2 last year had a very high base. So that again is going to be a constraint as far as this is concerned. There is pressure on the rupee. Okay, a lot of the FI selling is also draining a little bit of liquidity out of the system. So I'm not trying to be this. Long term, I'm very, very bullish on India. Short term, you're going to have corrections. And when those corrections come in and when there is blood on the street, we'll be the ones who will be buying stocks.
No, Siddharth, feel free to call a spade a spade. That's what we love about talking to you, right? You don't have to be reasonable about how you're sounding. We call you in order to get your view. So let's be open about it. Okay.
So my office guy told me, you're on television, keep your emotions in check.
No. Let it flow. It's completely fine because I love it when you're speaking your mind because, like I said, that's why we love talking to you, Siddharth. Okay, where is it that you find pockets or oases of growth? The reason, again, I ask this to you is there's been a lot of chatter over the last 18 months about commitments, let's say, that the government has made at global levels and policies which are underway, which will involve the higher probability of government spends, and those companies will probably get orders, not necessarily from the government, but because of the ecosystem working out there. Where is the higher probability of earnings growth either falling less or recovering faster?
So, Neeraj, if you remember our first interview, which was probably 3 years, 4 years back, I remember I did it from a hotel somewhere, correct? And we talked about capex and infra.
Right.
And nobody was talking about that. At that point in time, everybody was talking about banks. And I said, this is this. Now, the point is that cycle is behind us. You have to understand capex, infrastructure are cyclical industries. And more importantly, even if the capex and the infrastructure spends come, the valuations were so lofty that next 10 years growth rates were factored in. The biggest thing that we have to understand is every single time where people overpay for growth, okay, you get hurt very badly. You look at the popular stocks of 4 years back, which were Asian Paints, Titan, Bajaj Finance, HDFC Bank, D-Mart, correct? Great businesses, but the point is the valuations were so expensive and people said, oh, these companies are going to grow at 30% for the next 10 years. And then if the growth doesn't come in, that is where you get hurt very, very badly. So same thing with infrastructure and capital goods stock is, and we had plenty of them in our portfolio, is one, these are cyclical industries. Second, the valuations were something like you can't pay 60, 70 times earnings to cap goods companies, and that too at peak earnings. That's a recipe for disaster. You have to buy these companies when they're reporting losses.
Sure.
right? There were all sorts of memes around BHEL at 10 rupees. You know, BHEL 20 रुपए में आता है, BHEL का stock 10 रुपए में आता है. That is the time to buy those stocks.
Not now.
Not,
Point well taken.
Yeah.
Point well taken.
So let's look at sector by sector if you want to.
Yeah, let's try and do that.
Right. First, let's look at banks. Banks are really one. We've not had a bad credit cycle for more than 15 years now. 2008-9 was the last bad balance sheets that you had, and everyone's argument is, but corporate balance sheets are so strong. But my argument is the debt this time is at the individual level. Right? And RBI for the last 6 months has been crying hoarse about personal loans, about credit card loans, and their big worry is a lot of these loans are getting diverted to the stock markets. This is RBI's words, not more. And then you correlate that to the option trading thing, correct? That this money probably went into IPOs or option trading or whatever. So banks really struggling for deposits, right? Credit quality, you're already seeing for some of the shadow banks, which is the NBFCs. You know, the results have been very bad, and some of the banks have reported pretty bad numbers. So, and nobody expected the kind of numbers that an RBL or an IndusInd bank posted. Nobody was expecting those kind of, none of the analysts. So banks, tough time. You're talking about IT, right? It's a slow growth industry. At the end, majority of the companies have delivered single digit revenue growth. They're not like NVIDIA growing at 100%.
They are not.
Right? So why 40p multiple? Why 50, 60p multiple for some of the mid-cap IT names? I don't understand. So expensive, correct? And growth is, and then there's a big thing that what if the US slows down? Right? Again, US market cap to GDP is 205%, which it has never been in history. So that is there. Pharma and FMCG are supposed to be the defensive segments. Where markets correct, those are the stocks. In fact, FMCG is the one which is corrected the most this time around. So staples, you know, I have seen a significant discount. Pharma, again, as I said, what happens in the US with Robert Kennedy coming in as their health advisor, as I said, nobody knows about that. Cement companies, right? Weak volumes, weak there. So where's the growth? You tell me where's the growth. Tell me one sector where you interact with a lot of people on a daily basis. Tell me, don't tell me opinions. Tell me the fact that where is the growth?
All right. So, okay, small sectors, but I'm just trying to, again, mention what I'm hearing from corporates. So urban consumption has gone down, but the wedding season related businesses are sounding off very positive commentary. It's a small niche. Maybe it's hotels, maybe it's some of the jewelry companies, maybe some of the clothing companies, etc., retail companies. They are talking of some optimism over the next 6 months. What's your view there? It's a very small bucket, just asking. And then I want your view on power. That's the second one, because that's a larger one.
Oh, right. So, as I said, you know, hotels, expensive. You're looking at peak earnings probably. The only segment that has really done well in India over the last 6 to 8 months is been the ultra luxury segment, because the high end residentials, the expensive cars, the 5-star hotels, because obviously, you know, they were the ones who became rich through IPOs and through the stock market. So that's, again, as I said, probably we're looking at cyclical earnings, cyclical peak for some of these things. What happens when you know, the markets go down? March 2020, people weren't dining out in 5-star hotels or booking Mercedes, right? It's only during good times. So, small segment, as I said, but probably again, valuations, if you look at it in the global context, are terribly expensive.
Okay, what about power, Siddharth? It's a bucket which you had exposures to as well. Power and the pick and shovel theory as well. Maybe not power producers, but some of the ones who are suppliers. What's your view there? Because the targets are very high.
Again, as I said in our monthly newsletter, which, by the way, now more than 50,000 people, and in fact, a lot of sell-side people have called up and said, this is very, very good.
Yeah, it is. It is. Right? We highlight it, by the way.
Okay.
Yeah, we do. Of course. But yeah, please make your point.
So, we said last month, there was a 5% dip in power consumption in India. Right? This is September.
Yeah, peak power demand has fallen.
Yeah, and October, demand has again slipped by 1%. So our big thing was that we are at a stage where probably capacity addition will match demand.
Okay.
So it's a much longer cycle. We over-invested in power 2008-9. Next 10, 12 years, we did not invest in power. In fact, we've done a very good note on the power sector. We'll send it across with you, and maybe you can put it. And this was that, are we over-investing in the power sector?
Okay.
Okay. Then for 10 years, you had no investments in the energy sector because energy prices were going down. Typical, cycle that comes to play through. And then you had all of a sudden a big demand-supply mismatch. And then last 4 or 5 years, we've had huge investments in power and energy sector. And today we are at par. There's no shortage anywhere in the country as far as energy is concerned. Right?
Sure. Okay.
And thanks to the government, they've done a fantastic job of ensuring every village in the country gets power, and 24/7. And you and me have grown up, and probably you've grown up in Bombay, so you don't know of outages. But I've grown up in a suburb, and I know that there were outages for 7, 8, 10 hours a day, and during summer months, this used to be probably 3 or 4 days a week.
Got it.
So clearly, we are self-sufficient as of now, as far as power is concerned, right? It's not like power demand is going to grow at 10, 12% in India. It cannot.
Got it.
Historically, it's grown at 7, 8%. It will continue to grow at that level, and it's a cycle. It will play itself out again.
Okay. So, viewers, net, he's been cautious. He's not turning bullish as of now, and with reasons that he's highlighted. Urge you to try and see this whole interview again on our digital media platform if you're seeing this, to try and understand what Siddhartha Bhaiya is trying to convey via this conversation. But Siddhartha, it's always a delight talking to you. Thank you for doing this, and thank you for being open and calling a spade a spade. We love you doing that. So much appreciate you doing this.
Thank you. Thanks a lot, Neeraj. Pleasure to be here to talk to you.
Yeah, no, the pleasure, I can tell you, is entirely ours. And viewers, thanks for tuning in to this edition of The Talking Point.